Hello everyone. I have to apologize that I've been so quiet since all the kids are back at school. I've really struggled to get the time to actually do videos, and I'm going to try my best to upload at least one video every week from now on to help prepare you for your final exams. So the first video we're going to look at is on the chapter for fixed assets. You will see that I don't cover theory that much. I'm trying to teach you how to actually do the actual activity. I feel theory is something that you can cover on your own. So yes, we're going to jump into it and start with an activity on fixed assets, looking at how does the T accounts look, how does asset disposal look, and how do you enter all of this into note 3. I hope you enjoy it. Please remember to subscribe to my channel, and yeah, let's see. Right, so let's jump into it and start with an activity on asset disposal, doing the T accounts and the note. So when I start with this activity, I'm going to scan over here and I'm going to see I sold a vehicle. So that's where I'm going to start. I'm starting with my vehicles, and let's just jump into it and start with the vehicle that I'm selling. That's the thing that's most important. So, and that's also the trickiest. So I've got this little method that I do. I call it my tick list. Okay, so I'm going to dot a couple of things down in my tick list, and then I don't have to read anything over here again. So the first thing that I want is the cost price of the vehicle or the asset that I'm selling. I read over here, I sold it on the 31st of December, cost price 30,000. The next thing I want is the accumulated depreciation for this asset at the beginning of my year. And they normally give this to me as well. So 28 February 2015 will be the beginning of my year because my year started in March. So that's 12,000 Rand. The next thing I need is the depreciation. I call it depreciation X, the extra little bit that I drove around in this car before I sold it. I'll have to go and work it out. And then I need the selling price, and it said there that I sold it for 17,250 Rand. So I then also need a timeline. So my year starts in, let's just do it in a different color quickly. No, I'll explain to you now why. March, April, May, June, July, September, October, November, December, January. Okay, so I drove around in my green car until the 31st of December. Okay, so now I can clearly see that I drove around in this car for 10 months before I sold it. So I'm going to work out depreciation on vehicles. It's 20% on the diminished balance method. So luckily for me, I've got everything. I've got the cost and accumulated depreciation here in my tick list. So 30,000 minus 12,000 times the 20%, and now 10 over 12, that will give me 3,000 Rand. Okay, and then the next thing that I do is I draw a little block around those two, and I'm going to add them together, 15,000 Rand. Okay, so that's my green one. I always color code everything, and the vehicle that I'm selling will be my green car. Okay, then I also bought a new one. So the new one over there, a new vehicle, that will be my red car. Okay, the new vehicle was bought on the 1st of September, and I had that until the end of my year. So it's 1, 2, 3, 4, 5, 6. So then here at the bottom, I'm just quickly going to do that calculation, which is 110,000 times 20% times 6 over 12, 11,000 Rand. Okay, I'm not done. Okay, if I go and look at my vehicle balance over there, the 130 will have to be split up between the green car. Remember, I'm selling the green car, and the cost of the green car was 30,000. So that means there's still a car left, and that's my blue one, 100,000 rand. Okay, and I'm going to do the same with the accumulated depreciation. Again, that's why it's so nice I did it here in my tick list. The green car one is 12,000, so I'm going to put it in there as 12,000, and then the blue one will be 24. So now I've split the depreciation linking to the vehicle that I'm selling and the vehicle that stays. So now I still need to work out depreciation on the blue one. There's the cost, there's the accumulated depreciation, because the blue one I had for the entire year. So now we're going to do another calculation over here, and that will be 100,000 minus the 24 times 20%, and that gives me 15,200 rand. And then the total is 26,000. Okay, so again, I've only looked at vehicles. There are 3 of them. The one I sold, I did my calculations. The one I bought, which is new, I did the calculation for depreciation. And because it's diminished balance, I not only had to split the cost, but also the accumulated depreciation. And I did my last calculation to calculate the depreciation on the car that was there all along. And now, because it's so nicely set up, I know this is how I do it. All my calculations are together and they are neat. So now we are going to go and fill everything in, and having my calculations in order like I've got them just makes it so much easier. We obviously have to do everything in date order. So the 1st of September, I bought a new vehicle on credit. Okay. Then the next thing I did was on the 31st of December, I sold. So now I'm going to use my tick list and fill in everything for asset disposal, starting with filling in the cost in my vehicle account. Okay. Next thing I need to fill in is the extra depreciation that I worked out, the 3,000. Okay, so I'm going to go to accumulated depreciation on vehicles, and on the date that I sell it, I'm filling in the extra little bit. Okay. Then I need to take everything out, and that is why I added the 2 together. I added the accumulated and the extra together to get 15,000, because I need to take everything out. I'm selling this vehicle. Okay, so now the 30 over there will go over here. The 15 over there will go over there. Okay. Then I need to fill in the amount that I was paid. The selling price, I have it in my tick list, 17,250. And let's just say I sold this vehicle cash, then it will be bank over here. If I sold it for credit, I'll write debtors control, If I had a trade-in, we write creditors control. If the owner took it, we write drawings. So then in my asset disposal account, I must just figure out which side is the biggest. And at the moment, I've got 27,000. It's over 30,000, so I know that I'm going to enter a profit over here. Profit with sale of asset. So my total is 32,250 if I worked it out correctly, which means my profit is 2,250. So the asset disposal account is now done. I now need to go and complete my vehicles and my accumulated depreciation. So in accumulated depreciation, I must still make an entry on the last day of the year. Because remember, I worked out depreciation on my cars and they had to be entered on the last day of the year. I've added them together, so the 26,200 will be entered over there as another depreciation entry. 26,200 Rand. And all I do then is I add it up, 65,200. And then I need to work out a balance on the last day of the year, which is 50,200. So accumulated depreciation is done. And then the vehicle account, I just need to get the total. It's 240,000 at the end of the year. I just need to work out my balance, which will be 210. Okay. So now the only thing left to do is to look at my equipment. I've got equipment there of 44,000. And if I go and read here, it says that additional equipment was bought on the 1st of November for 14,000 and has been recorded. So the 14,000 is already in there. I need to work out depreciation 15% on cost. So I'm quickly just going to do my calculation over here. I can't use the 44. See, the balance over there for equipment is 44. I can't use the 44. I need the balance at the beginning of the year. That will be 30,000. Because 30,000 plus the 14, which is the new one that I bought, will give me 44. Both of them are on cost, so it's just easy multiplying with 15%. And the new one I had in my books for 4 months. So that answer is 7,000, that answer is 4,500, and then my total is 5,200 Rand. So now I've got everything. I don't have a T account for my equipment. I made all the calculations because now we are going to enter everything in our fixed asset note. Right, so if we have our fixed asset note, I'm going to go back to all my calculations and my question. They could just as well have asked you to do all of this and only enter it in the fixed asset note without the T accounts. Your calculations will stay the same. So let's start with the easy one, which is land and buildings, 360. I didn't have anything with land and buildings. So I'm just going to enter the cost of 360 in there. Carrying value will be 360. No additions. We don't have anything else. The cost at the end will be 360. And the carrying value will be 360. no depreciation. Okay, please remember additions, they sometimes talk about expansions. If they have built a new building, or they bought a new building, or even just expanded their existing building by building a new storage room, it is seen as additions. Never depreciation. Land and buildings in your syllabus will appreciate in value, and we don't enter that in note 3. It only happens when you sell a building, and again, that's not part of your syllabus. Then we're going to go to vehicles. So, vehicles, we've got our cost at the beginning, and we've got our accumulated depreciation at the beginning. Okay, so cost 130 and accumulated depreciation 36. Okay, then we need to enter what we bought. I bought a new car to the value of 110,000 Rand. Okay, my red one over there, 110. Then I need the disposals at carrying value. And again, there's a reason why you have to add the accumulated depreciation at the beginning of the year together with the 3. That 15 is the total depreciation, and carrying value is cost minus all the depreciation. Okay, similarly, if we quickly look over here again in your asset disposal account, cost on the debit side minus accumulated depreciation on the credit side. Okay, so 15,000 will be filled in over there, the 30 minus the 15. Okay, then I need to fill in all the depreciation, and now you have to focus. That depreciation, the 3,000, was depreciation for this year. The red one was depreciation for this year, and the blue one was depreciation for this year. So I need to say 26,200 plus the 3. Alternatively, if we look in our T account, there's 2 depreciation entries on the credit side, which will give me over there 29,200 Rand. Okay. Then I need a cost at the end. And again, this might be tricky or it might not. To get the cost at the end, it's the balance at the beginning of the year plus what you bought, which is 110,000, minus the cost of what you sold. Okay. Alternatively, if we look in our T account, the balance plus what we bought minus what we sold will give me 210,000 as my cost at the end. With the accumulated depreciation, it's a bit more tricky. I prefer that you draw your T account, because then you can just get the balance and copy it in. So it's easier to just memorize the layout of the accumulated, sorry, that shouldn't be in a bracket. You just memorize the layout of the accumulated depreciation account and you fill it in. Alternatively, to get that end balance, it's the balance at the beginning plus all the depreciations, the green one, the red one and the blue one, minus the asset disposal depreciation that you take out. Only then do you get your final answer. Okay? So I filled all of that in. Then we need to fill in our equipment. Remember, the cost at the beginning of the year is not 44. The 44 will only be at the end of the year, and I bought new equipment to the value of 14,000 Rand. The accumulated depreciation for equipment at the beginning of the year is 14,000. I worked out that the depreciation during the year is 5,200. So the cost at the beginning plus what I added will give me the cost at the end. Same with depreciation. The amount at the beginning plus the depreciation for the year will give me the amount at the end. And I can work from the top to the bottom, mainly because I didn't sell any equipment. Okay. Right, and then to finish off, all I did was cost minus accumulated depreciation will give me the carrying value. I did it for equipment at the beginning of the year, for vehicles at the end of the year, and for equipment at the end of the year.